of the Ramadan month. Um, so last week I couldn't come to class. So this is a replacement class. And I just want like to make a note. The reason that I couldn't come to class is because, and also the situation today, I have a crack in a cracked tooth, ya, and it causes the gums, ya, gusi saya menjadi bengkak sehingga saya kesulitan ngomong. Nah, ini sekarang saya udah mendingan, cuman terus terang masih sakit. So I will sound a bit weird because karena gusinya lagi bengkak. Okay, so that's the reason why I couldn't come to class on last Thursday, but I'm on medication for my untuk gigi saya, jadi udah mendingan. Okay, so today is also going to be a fairly short lecture. So it's going to be weird. The way I talk today, it's going to be a little bit weird because I'm trying to really stay off of the bad side of my tooth. Yeah. Okay, so today we've reached week 11. Yeah. So we are 3 weeks away from our final exams. And today's topic is going to be cost of capital. Yeah, it's going to be cost of capital, which is something that I'm sure you're all familiar with. You've seen it in your conventional financial management class. Yeah, we all know what cost of capital is, but of course now we would like to put it into the context of Islamic finance. Yeah, now when we discuss, okay, wait, I'm going to do a slideshow. Okay, so cost of capital. Before we get into the discussion of cost of capital, we're going to start reminding ourselves with something that I'm sure you've heard of this in your other classes before, about why it is very important, yeah, and why it's a big issue when it comes to cost of capital evaluation. Yeah, why? Well, because we start off at different footings when it comes to the Islamic financial economics versus the conventional counterparts. Yeah, in Islamic economics, we have a clear separation between between money and capital. Yeah, so money, yeah, is different from capital. Yeah, there's a clear separation between the two in the Islamic perspective. Yeah, when we say money, then they have different characteristics. When we say capital, then we have another set of characteristics. But that's not the case in general. That's not the case in conventional finance. Yeah, money is, you use money interchangeably with capital. Money is capital. Capital is money. Yeah. Now, what is the implication in Islamic finance? What is the implication of separating between money and capital? Well, there are several. The first one is you consider money as a flow concept instead of a stock concept. So that means, it means money needs to keep flowing. Yeah, it doesn't stay put in one position. Yeah, in order for money to be valuable, it needs to generate a certain output. Yeah, it needs to be put into a certain real asset, and then some activities must be conducted onto the fixed assets and generate a certain level amount of money. Yeah, and yeah, so this is a, ya, diputar terus menerus mendapatkan keuntungan yang lebih besar. That's why it needs to be invested in the real sector. Yeah, if money were to be a stock, were to just stay in one place, yes, seperti dalam tabungan, then you have to pay a certain amount of zakah from it. Yeah, when it has achieved a certain level. So it's a clear so there's a clear definition what money is. Yeah, it's a flow concept, it's not a stock concept. Yeah, and then another implication is money is a public goods, meaning that everyone who lives in the world, yeah, every human being has the same entitlement to money. Yeah, no group of people, no group of company, no group of people, no company, no institution should monopolize money, should have exclusive control over money. Yeah, people should be able to use it freely. Yeah, without constraints. Yeah, if you want to choose this public good into a private good where we can attach our personal objectives or company or business objectives, then you must turn it into capital. Yeah. So once it becomes a private good, it's no longer money, it's now capital. Yeah. So there's a clear separation between money and capital in Islamic finance. Yeah. Yeah, that's why you may not hoard atau menumpuk uang. You may not hoard money. Yeah, because it will disrupt the economy. Yeah. If you want to money is not hoarded. Yeah. It's used as capital. Yeah. Then it becomes a private good. Then it becomes unique to a company's objective, whether it's for uh, non-profit goals, or is it for creating consumer goods, or is it for creating mining vehicles? Yeah, then it becomes a private good once it's turned into capital. Yeah, this is the difference. Yeah, and then this is oops. And then another clear difference between the view, yeah, or the approach that the Islamic perspective has compared to their conventional counterpart is that we don't really believe in the notion of time value of money per se. Yeah, we don't call it time value of money per se. Yeah, why? Because actually, in the conventional perspective, when we say time value of money, it's as if money itself is a living entity. Yeah, it's as if money itself is a living entity. It can grow. Yeah, it can grow in value. Yeah, so that's why the value today and the value 6 years from now will be different. It's because the money itself, no matter what happens to the surrounding, yeah, no matter what happens to the surrounding, the money itself can grow in value. That's the conventional perspective, the time value of money. Yeah, in linguistic terms, yeah, it literally means that money has time value. So it's money that has value and that is able to change its value, to grow, to decrease. Yeah. But that's not the case. That's not how we believe in it. That's not what we believe in Islamic, using Islamic perspective. We believe it's time who has value. It's not the money that has value. Yeah. It money has a different value, yeah, as an implication of the different value of time. Yeah, just like when umbrellas sell better during rainy season compared to during dry season. Yeah, it's because it's the season that has a value, not the umbrella. Yeah, that's why we call it the economic value of time. Yeah, um, and it's only possible because we engaged in economic activity where we profile, where we generate the risk and return profile. Yeah, then money will kind of sort of has a value as an implication of this economic value of time with regards to us making profiles as to return and risk. Okay, let's refresh our memory with a project evaluation. Yeah, project evaluation. Yeah, more specifically, we'll be talking about the conventional project evaluation. Yeah. Um, does anyone remember how do you calculate the cost of capital? How do you calculate the cost of capital in when you learned about it in your financial management class? Caranya gimana? Hitung cost of capital itu gimana sih? What approach do you use? Anyone? Ada yang mau coba? Febrina.
Yes, ma'am.
Yes, would you like to try? How do you calculate? How do you calculate cost of capital? Or you can start with what's the definition? Yeah, in your own words, what it is.
Cost of capital means that cost that I'm sorry. Is my voice clear, ma'am?
Yes, it's very clear.
Okay. Cost of capital means the cost of money or funds that a company use for finance for financing its operation or project or something. Is that
Okay.
one?
Okay. Yes, that's correct. So it's basically how much how much you need to give in return to the different parties that inject inject capital into the business. Yeah, what do you have to give in return? Yeah, how much do you have to generate in return? Which, or in other words, the cost of that capital that is injected into your business. Yeah, and and how do you usually calculate it?
If I'm not wrong, the calculation is cost of debt plus cost of equity. Correct, ma'am? As I remember, in financial management is cost of equity plus cost of debt and plus cost of preferred stock or something.
Yeah. Yes, that's correct. It's basically the weighted average. Yeah. How much of those three components, yeah, three different types of capital, how much in proportion relative to each other do you use? And then you take the weighted average, and then you just use the respective rates. Yeah. That's your cost of capital. Yeah. And then we call it as the WACC. Yeah. Or the weighted average cost of capital. Yeah. It's which is simply just the weighted average of your cost of debt plus your cost of equity and your cost of your preference equity. Yeah. Um, no biggie there. But how do you usually? What is the cost of debt again? Itu cost of debt itu apa? Kalau di conventional finance, the cost of debt is apa? Adalah someone else? Would you like to try? What acts as the cost of debt? Cost of debt-nya apa ya? Sebentar. Anissa. Itu Aulia ya? Anissa Aulia itu asdos saya ya? Bukan?
Iya Bu, asdos.
Oh ya, sorry ya. Itu Aulia ya. Oke, Iqbal.
Yeah, ma'am.
Yeah, would you like to try? What is cost of debt? Cost of debt itu apa biasanya?
By definition, ma'am, atau
Oh, you can give a definition. You can give an example. I just need to make sure that we're all on the same page. And if I go on without making sure that we're on the same page, it would be it wouldn't be good. So I need to make sure that we're on the same page. So the weighted average cost of capital is the weighted average of cost of debt, cost of equity, cost of preference. So now let's start with cost of debt. What is cost of debt?
Maybe such a beta, ma'am.
I'm sorry?
Kayak beta gitu nggak sih, ma'am, kita nyebutnya?
Most definitely not. Cannot be further away. Amat sangat bukan. Cost of debt. What about cost of equity? You want to try cost of equity?
Maybe. Sorry, ma'am. The rate that company pays on its debt.
which is, yes, okay,
like
the rate
required rate.
on its debt, yeah, or that's correct. But what is the everyday term that we use?
Pardon, ma'am?
What is the everyday term? The everyday term that we use for you said the rate that the company pays for its debt, which is correct, yeah. But there's an easy term for that. There's an everyday term that's very familiar with us. It's called, what is it called?
Ma'am, can I help Iqbal maybe?
Iqbal, you want to keep
Yes,
trying, or?
yes. I thank you, Danang. If you want to help.
Okay, all right. Who's speaking?
Danang, ma'am.
Okay, Danang, you may try.
Is it the interest rate for the cost of debt and required return for the cost of equity?
Yes, exactly. Yeah. So for the cost of debt, it's simply the interest on the debt. Yeah. Because you borrow money. Yeah. Your source of capital is debt or the creditor, and they're not in it for free. Yeah. They want something in return, which is interest that you pay to them. Yeah. So that's the cost. Sama kaya, just like when you go to the market and you pay for apples, that's you going to the financial market and you pay for debt and in the form of interest. Yeah. So that's the cost of debt. And Danang, the cost of equity is apa tadi?
Required return.
Yes, required return on equity.
From the equity.
Oh yeah. Do you remember how to calculate that? Danang, masih ingat nggak?
Not quite, ma'am. Sorry.
Yeah. Would anyone else like to try?
Maybe I will help Danang, ma'am.
Is siapa? Banu?
Iqbal.
Oh, Iqbal. Okay, yes, Iqbal. How do you calculate the required rate, the required return on equity?
Is it given, ma'am, the required return?
No, it's not given.
Oh.
You have to calculate it. Sudah, Iqbal? Someone else would like to try?
Is it risk-free rate plus market return minus by risk-free rate?
What is that? What is that called?
It's called, I forget, ma'am.
Okay. Yes, that's correct. Yeah, that's how you calculate the required return on equity. Is basically, there are several ways actually. One of the way is by using the capital asset pricing model, yeah, or the CAPM. Yeah, that's where you use beta. Yeah. So basically, remember, this is so how much. Okay, I want to do business, but in order for me to do business, I need capital. Yeah. So how much does all this capital cost? Yeah. Well, it's an average of all the different types of capital that I use. One, debt. Yeah. The cost is interest. And then there's equity. Now, with equity, it's a bit more challenging to calculate the cost. Yeah. It's not as straightforward as interest. Yeah. Because it's something, think about it. When it's return on equity, you don't really assign a number to it, right? It's your shareholders can gain from two. Yeah, they can gain from capital gain when they trade the shares in the market, or they gain from dividends. Yeah, so there's a so to know what the return we should promise, it's a bit tricky. That's why we come up with formulas such as the capital asset pricing model. What you do is you start off with, you look at the risk-free investments in the market. Yeah. In this case, it's the safest investment in the market. So it must be the debt that is issued by the government, because there's very small chance, or the government has the smallest chance compared to everyone else of going bankrupt. Yeah, they can go bankrupt, like what happened to Greece. Yeah, but they should have the smallest chance of going bankrupt compared to everyone else, so they can be considered as risk-free. Yeah, that's the bare minimum that you should give your shareholders. Yeah, but yeah, that's not enough. Just giving them risk-free is not enough. Why? Because it's equity. It's shares. It's risky. You don't guarantee a return. Unlike debt with interest, you guarantee them payments of interest. So for them, it's not risky. Yeah. But when it's your shareholders, it's risky. They can get a lot, but they can get nothing at all. Yeah. Therefore, you need to give them at least risk-free plus premium. Ya, you need to give them more. Harganya menjadi lebih mahal dibandingkan dengan hutang because it's riskier. High risk, high return. That's your sources of capital are always thinking that if it's high risk, then I want high return. Yeah, if you're asking me to buy your shares, it's risky, then give me more return. So that's why it's risk-free plus a certain premium. Now, how do you calculate the premium? Well, according to the CAPM model, you look at the beta. Yeah, what is the beta? Well, beta is basically basically beta means that every asset or every share or every portfolio in the market should be measured in terms of relativeness with regard to the riskiness of the market. Yeah, so that means how sensitive they are towards the market. So if something happens to the market and then the market drops by 10% the price, how much will they drop? How much will this particular asset drop? Yeah, beta, and then you look at the market risk premium minus risk. So that's the risk premium. Yeah, that will have to be a number above the risk-free rate, and that's your required rate of return. Yeah, and that is you take the weighted average of all those, and then you end up with your estimated cost of capital. So now as a company, you have in mind that, okay, so this is how much I need to generate in return to keep my sources of capital happy. Otherwise, they're going to get out. Otherwise, they're going to sell their shares. Otherwise, they're going to stop lending to us. Yeah. So in order for my business to continue ongoing, this is how much I need to generate in return. That's the weighted average cost of capital. Now, is it important? It's very important. It's pricing. Yeah, it's pricing. It's determining the price of modal kita, ya, modal yang kita pakai untuk running our business, ya, which then nanti kita akan masuk ke pembahasan pricing. Of course, that was the conventional way of doing it. Yeah, of course, when we saya istirahat dulu. Gus yang baru datang, kalau saya ngomongnya agak aneh karena gusi saya bengkak, jadi lumayan sakit. Of course, when we take the perspective of a Sharia finance, some things must be adjusted. Yeah, the first one is, of course, interest. Does it ring a bell? Yeah, interest doesn't make us happy. Yeah, we don't like interest. Yeah, so we can't use that. Yeah, and then because it's built on the time value of money. Yeah, built on the concept of time value of money. Yeah, and Islamic finance is all about is all about equity financing. Ya, atau bagi hasil, penyertaan modal. Ya. But before we get into the actual Islamic way of evaluating cost of capital, let's first talk about what about this pricing? Yeah, this pricing activities. Yeah, this is just a little background information that there's different opinions as usual. Yeah, which is good. Different opinions. Let's just look at it let's just look at it this way. Yeah, when you're concerned about something, when you take something so seriously, you have different parties with different expertise, different experiences, and then they might have different views. Yeah, and we're thankful for that. In Islam, we are very much careful. We are very careful. We scrutinize everything. Therefore, many times it results in 2 or 3 different opinions. The same with fixing prices. Yeah, some say it's allowed, some say it's not allowed. Yeah, there's the one train says that it's never permissible to fix price, yeah, whether to be lower or higher than the market in the future, yeah. Why? Because that it's called zulm or a tyranny, and it's not allowed. So it's always the free market, yeah. And but then there's another train of thought that says that it's allowed, yeah, fixing a price is allowed as long as the objective is to avoid uh, is to provide justice between people and to avoid the element of injustice. Yeah, and when fixing prices will bring upon the people maslahah, then it's fine. Yeah, because without fixing prices, then prices of the housing, prices of cars, prices of food, of garlic, of onions will shoot up the roof. Then you have to fix prices. It's fine, yeah, because otherwise maslahah amah will not be achieved. Yeah, so this train of thought says that the government is allowed to fix the market price when there is a price increase above the normal price in the market. Yeah, because we don't want to have to pay for 500,000 per kilogram bawang, for example. Yeah, so the government has to fix the price. Yeah, and we have a tendency to follow this train of thought. I'm sorry. So speaking of pricing, why do we use benchmark pricing? Yeah, because it's not necessarily an act of fixing a price. It's actually an act of providing a guide or an indicator of pricing. Yeah, because we need to know what is the fair price of something. We need to know what is the fair price of a certain asset, of a certain investment. Yeah. Why? Because we want to provide justice for the people. Yeah. And it also provides an element of control. Yeah. Control of price in the market. Of course. Yeah. If there's a benchmark, yeah, market players will not freely tweak around with their prices because they know that there should be a benchmark, because they know that there's a benchmark that everyone looks upon in making decisions whether to buy and to sell. Therefore, the act of tweaking around to your own wish, as to what happens to the price is very limited because there's a benchmark, and you know that people will be affected by this benchmark that they look upon. Yeah. And having a benchmark is actually, so that's why having a benchmark is in line with the Sharia objectives, because it establishes justice and fairness in financial transaction. Tidak terdolimi karena harga terlalu tinggi dan lain sebagainya. Yeah, because there's a benchmark. Yeah. Yeah. So a market ini sudah disebutkan tadi. So once again, when you use a benchmark, it's not really as an act of fixing a price per se. No, it's just it's a disciplinary action, I would say. Yeah, because it acts as an indicator, as a guide. Yeah, when there's a guide, discipline increases. Yeah. Yeah, of course, what's more important than considering should there be a benchmark or should not be a benchmark is the actual activities of Islamic banks. Yeah, it should when in conventional banks, it's simply just lending and borrowing, but in Islamic banks, a lot more is involved. There's a trader, there's a partner, there's a producer, there's an entrepreneur, there's a wakil, and so on and so forth. Yeah. Yeah. So benchmark is fine as long as it meets the Sharia criteria. For example, it must be disclosed and displayed to all contracting parties. Yeah. Yeah. And when computing the pricing benchmark, you must take into consideration the potential loss that can be incurred by holding on to a certain investment. Yeah. Saya rasa cukup. Yeah, and of course, yeah, the Sharia limitations. For example, when you calculate the benchmark, when you want to create a benchmark for an Islamic instrument, then it should be free from haram activities, yeah, from interest rates, from non-real economic activities such as indices for financial derivatives products, yeah, because it's not allowed, yeah, yeah. However, we can use inflation index, yeah, 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 and it should be free from elements of heavy deception, corruption, and fraud. Yeah, yeah. It should also be free from the activities of hoarding, yeah, menimbun, yeah, speculation, of price hiking, and the monopolization of consumer products. Yeah. And of course, just like how they do it in conventional finance, you need to take into consideration the trend, the development of the economy condition. Yeah, because we live in because the economy, yeah, shapes the consumption. Yeah, the economy shapes the investment activity. Yeah, so you must take into consideration those factors as well. Yeah, they need to be accurate, they need to be objective and transparent. Yeah, so that's ideally the benchmark rate in a Sharia finance should should um, should fulfill those points. Yeah. So going back to the uh, determination or the calculation of weighted average cost of capital. So how do we do it when we use the Islamic perspective? Yeah. Um, because we need to keep in mind that this rate needs to fulfill the list, the previous benchmark rate list that I told you. Yeah. So because we have to fulfill those conditions, so this is what happens. Yeah. We can still use the formula. Yeah. The formula itself, there's nothing wrong with it. Yeah, it's just the weighted average of the cost of capital. Yeah, it's just the weighted average of the cost of debt and the weighted average of the cost of equity. So there's really no problem with the formula itself. We can still use it, yeah, in Sharia finance. Yeah, yeah. However, when we break down these items, of course, now we understand that there are some things that we can no longer apply. Yeah, for example, interest. Yeah, in your CAPM. Yeah, we no longer believe it. Yeah, because for the market rate, the benchmark rate use interest, then we no longer believe it. So when it was supposed to be beta in parentheses RM minus RF risk free, yeah, we no longer use it. Yeah, because RF, yeah, the risk free rate, it's bunga, so we no longer so we no longer use it. So the actually the CAPM, it's simply then it should be like risk free plus beta in parentheses RM minus RF, right? But we can no longer use it because we if we forbid risk free, then we can no longer use it. Then it becomes just this equation. So actually, the cost of equity is exactly the same with what it is observed in the market. Yeah, this is if we strictly forbid the use of risk-free rate as an indicator. What happens is, yeah, for example, if you say, yeah, kenapa kok pakai acuannya masih LIBOR? Kenapa kok pakai acuannya masih JIBOR? Then this is what happens. The required rate of return of a certain equity just becomes exactly the same as what the required return of the market as a whole. Yeah. What is the implication of that? Yeah. But the problem is then it's not always the case where 100% of the capital market activity is permissible in Islam. Yeah, not everything in the capital market is permissible in Islam. Yeah, there must be some conditions. There are only proportions or parts of the capital market that is acceptable in Islamic practices. Yeah. Yeah. And then another problem is when it comes to preferred stock. Yeah. When it comes to preferred stock, we don't really like it. Yeah. Because one, it is it's predetermined. Yeah, how much you get in terms of the bagi hasil or in terms of the return, it's predetermined, so you know exactly in advance how much you get. Yeah, and also they get special rights in under the condition under liquidation. Yeah, so this might become so the so this brings forward an issue of unfairness. Yeah, so therefore, yeah, uh, therefore, what the weighted average cost of capital, yeah, because we don't believe in cost of debt. Yeah, we also don't believe in risk-free rate in the market. Therefore, it simply just becomes the weighted average of cost of equity. That's it. Yeah. So in Sharia finance, the best way of doing weighted average cost of capital is just ini. Jadi cuma simple. It's just the weighted average of cost of equity. That's it. Yeah. So yeah. So when you have so for example, when you have a combination of when your capital comes from three sources, yeah, murabahah, murabahah, yeah, musyarakah, yeah, and mudarabah, yeah, then it's just the weighted average of those three. Yeah. Well, actually, this is, I don't think this is quite accurate, because you can still use cost of debt as well. It's just that it's not interest. Yeah. So the weighted average cost of capital is still the weighted average of cost of debt plus cost of equity, but now we use the Islamic principles. Yeah, because murabaha is a debt-based transaction. Yeah, it's debt-based. As for mudarabah is a equity-based transaction. So it's simply just the weighted average of these types of equity and debt-based transaction. Ya, sehingga tingkat suku bunga yang digunakan untuk mendiktekan angka suatu proyek ada rata-rata tertimbang dan tingkat bagi hasil pembiayaan murabahah, mudarabah, dan musyarakah. Of course, yeah, we no longer look at we don't really look at the rates, even though in practice, when you try to determine bagi hasil ini, kita juga tidak sepenuhnya merem, ya, tidak melihat suku bunga acuan, ya, kita tidak sepenuhnya merem. We still look at them as a benchmark, as a disciplinary action, ya. So this is an example, an example of the problem. Yeah, for example, for murabahah financing, the rate is 7%. Yeah, and this is the weight. Yeah, 20%. Yeah, 20% of the fund is coming from murabahah, while 50% of the fund is coming from the capital is coming from mudarabah, and the rest, or 30%, is coming from musyarakah. Yeah, and these are the respective rates. So the weighted average cost of capital is simply just you take the weights and multiply them by the expectancy rate. Yeah. So this is your weighted average cost of capital. Yeah, this is how much whenever you, so what that means is whenever you see a project, then you need to discount the future income. Ingat, yeah, what do you do with the weighted average cost of capital? You use it to value everything. Yeah, every decision, whether you want to consider launching a new product, whether you want to consider merging with another company, what you do is you predict what the future cash inflow will be as a result of these actions. If you launch a new product, then how much will you sell and how much will be the cash inflow generated from that? Yeah. And then but that cash inflow needs to be discounted, yeah, using this weighted average cost of capital. Wait, saya perlu ada keperluan, saya perlu ngomong sama anak saya sebentar. Okay, can you hear my voice?
Yes, ma'am.
Yes, ma'am.
Okay. So that's it. That's your weighted average cost of capital in Islamic the Islamic way of doing your weighted average cost of capital. Now ini sudah ya, capital structure, cost of capital is an implicit. Saya nggak tahu kok ini kok slides-nya tiba-tiba ada di sini. Ini kita bikinnya bareng-bareng. Tapi ini bukan bagian saya. But you know what capital structure is? It's a mix of long-term financing, debt, and equity. And cost of capital is how much it costs. Yeah, because you employ that mix of capital structure, then how much you need to give in return to those sources of capital. Yeah, and this is the definition. Yeah, ini kembali mengulang aja sih. Ini cuma mengulang aja. This is the definition of the weighted average cost of capital. But in Islam, of course, we use the Sharia compliant counterpart. Yeah, so here for the murabaha, and this is for the mudarabah. Yeah, and we're always interested in market values, not book values. Yeah, and of course, margin expense is tax deductible. Yeah, okay. This is another example. Yeah. This is another example, ya. Kalau saya aliran yang masih sangat berhati-hati ya dengan COVID-19, so I don't go to the dentist. Yeah, usually I go to the dentist every 6 months just to have a checkup, but I don't now, and it's been a year, almost more. So things are really bad, but I'm still afraid of going to the dentist. So anyway, so what are the steps? Ini sudah tahu, we've gone through this. You take the weights, yeah, determine the required rate of return on each security, of course, and then you calculate the weighted average. Jadi cuma ngulangin yang tadi ya. So here's another example, yeah. A company has issued debt-based Islamic financing and common stock, ya. Jadi sebuah perusahaan they issue debt-based Islamic financing, mungkin sukuk, ya, jual sukuk, ya, to generate capital, and then they also sell shares, yeah, Sharia compliant shares, yeah. The market value of the securities are 4 million and 6 million respectively. So 4 million debt and 6 million common stock. The required returns are 6%, 8%. The tax rate is 35%. What's the WACC of the company? Yeah, so that's the value, 10 million. That's R. This is it. Biasa aja. Ya, sama aja. Hanya beda. Ya, sama aja. Yeah, this is your murabahah and this is your mudarabah. Yeah. Ya, apa sih ya? Hanya sama aja. Here's another example. Yeah. Market value of murabahah financing should be calculated. Yeah. Murabahah payable minus margin expense in advance. Yeah. Jadi of course, you need to take into consideration the proportion that has been paid off. Ya, ini kan hutang ya. Ini kan hutang, but then there's a proportion that has been paid off in advance. Maka you have to take that away from the murabahah payable. Maka murabahah payable is the market value of the murabahah financing is murabahah payable minus the amount that you've already paid off. Yeah. For example, a company has 209 million murabahah payable. Yeah, and $9 million murabahah margin expense in advance. equivalent rate of cost of financing is 9% effectively. Yeah, it means that the market value of Murabaha financing is $209 million minus $9 million. So that's a total of 200, and the cost is 9%. So that's the market value of your Murabaha asset. Yeah, the Murabaha capital. Yeah, I mean, and then the cost of having that capital is 9%. Yeah, and then other than Murabaha, you also sell sukuks. Yeah, you also sell sukuks as a means of borrowing money. Yeah, and the sukuk has an outstanding has a time to maturity of 12 years, and for every year it pays annual coupons of $16. Yeah, and at the end of the 12 years it pays 216 million. Then what is the market value? Well, that's the same as you do a debt valuation, a bond valuation. The present value is simply just this equation. Yeah, the bond value equation. Yeah, so you get 185.70. So if we combine both debt in the form of Murabaha and in the form of sukuk, you get a total of 200 plus 185.70, and so you get a total of $385.70 million. Yeah, so that's your total debt instrument, and the cost of that is 9%. 9% of this figure. Yeah. Okay, that is the end of today's lecture. Do I have any questions? I will take 2 questions.
I have a question.
Yes, who is speaking? Yeah.
Amira, ma'am.
Siapa? Can you say your name again, honey? Nggak kelihatan ini.
Amira Hana.
Amira.
Amira
Okay,
Hana, ma'am.
Yes, Amira.
So, ma'am, I just wondering. Actually, I still confused regarding the calculation of CAPM in Islamic. So, best and I understand in project management class, CAPM in Islamic has the same formula as the conventional cost. For example, cost of capital equal to risk-free rate and risk premium and beta. So, in this in Islamic perspective that I understand in project management class, the risk-free rate is still calculated into the calculation. For example, risk-free rate is using yield to maturity from SPFM. So I just want to ask: is there a difference between the calculation in application and theory?
Yes, it's a good question, because actually what I showed you is one opinion. Yeah, here's the thing. Yeah, the ideal thing is to not use risk-free rate at all. Yeah, if we don't use risk-free rate at all, then really the CAPM doesn't exist. Yeah, and this is what they're trying to say. But in reality, yaitu tadi, in reality, we still use we still use the CAPM. However, for the risk-free rate, we use, let's say, sukuk, misalkan. Yeah, in reality, that's the case. Just like what I said, in reality, even like I said here, they say that it's just the weighted average of murabahah, mudarabah, yeah, musyarakah. But in reality, they also employ JIBOR, yeah, Jakarta Interbank Index or Indonesia, yeah, overnight index, ya, atau KLIBOR, ya, Kuala Lumpur, ya, atau CIFU, ya, atau LIBOR, London Interbank Rate, ya, dan lain sebagainya. They still use it in reality. And remember, Amira, I said the CAPM is just one way. Ya, hanya satu cara untuk untuk menentukan required rate of return. Ya, in this particular example, we say that there's another option. If you don't want to use an CAPM, then you could just simply take the cost of itu tadi murabah, musyarakah, mudarabah. Yeah. But if you use the CAPM, yeah, why? Because some people don't believe in the CAPM. Karena CAPM itu basic, CAPM itu the main ingredients-nya itu kan beta ya. Nah, some people just some Islamic train of thoughts don't like the notion of using CAPM altogether because it starts from beta, and beta actually observes really the riskiness, yeah, but really the strongest benchmark that they use is the market rate. And so lots of financial scholars are uncomfortable with that, so they leave the CAPM concept altogether. Yeah, but if you were to use the CAPM concept, masih banyak juga yang pakai. Actually, sebenarnya di buku kalian yang Omar Obaidullah, ya, itu juga pakai CAPM. Cuman risk free rate-nya diganti sukuk, gitu. Jadi nggak masalah, Amirah. Jadi memang ada perbedaan pendapat gitu. Kalau yang saya tunjukin tadi, let's leave CAPM altogether, ya. Jadi cukup return yang perlu di-generate untuk different types of investment. Tapi kalau mau pakai CAPM ya bisa juga ya. Anda bisa pakai risk free-nya diganti dengan sukuk. Gitu kan. Ada banyak cara, ada juga it's not just CAPM ya. You guys do realize that how to calculate required return on equity is not just CAPM. Ya, ada juga multiples misalkan. Multiple approach, ya. Jadi we use financial ratios, ya. But CAPM is more popular. Not every Islamic scholars like it. Yes, a lot of times they simply just do what I showed you. Yeah, but if you were to use CAPM, you can. Yeah, you can use sukuk as a replacement of the risk-free rate. Sukuk issued by the government. Does that answer your question, Amira?
Yes, ma'am. The answer is very clear. Thank you, ma'am.
Okay, you're welcome. Ya, jadi nggak usah bingung ya. Memang ya, kalau semester lalu saya ngajar juga pakai CAPM. Cuman kalau ini ya memang harusnya dijelasin sih ya. So, it's a good thing that you ask. Bisa pakai CAPM. Tapi kalau sebenarnya ya nggak ngapain pakai CAPM, kita tinggal ambil weighted average of the different securities. Okay, another question. Tidak ada? Kalau tidak ada, maka ini tugas untuk minggu depan ya. You will work in groups, ya. It says buatlah tinjauan kritis serta summary dari 5 jurnal terlampir. But actually there's only 3, ya. Saya akan memberi kalian salah. Saya akan memberi kalian 4 bukan 3, ya. So every group will get 4 journals, and your task is to read all of them and then make summaries, and then next week be prepared untuk ditunjuk untuk presentasi salah satunya. It's gonna be acak. Yeah, so you don't know which journal you get. So each group gets 4 journals and you have to read everything, yeah, and then make a summary of everything, yeah. But then next week someone's going to present one group, one journal, but you don't know which journal. Yes, it's going to be a surprise, ya. And I'm going to jurnalnya akan saya kirim ke Aulia, ya, hari ini, right now, ya. Okay, no more questions? Tidak ada pertanyaan? Ya, tidak ada pertanyaan lagi. Kalau tidak, saya minta 1 hari pengganti lagi ya.